Okay, folks, good morning. Welcome to the member stock pick request. It is the 16th of July. Futures are up. Large cap, old tech names are going to lead the way along with the banks. And remember the chart of the Dow Jones Industrial Average. This is not our 100-year chart. This is, say, a 25, 30-year chart. And look at how extended we are. Very, very extended. We have what I believe is going to be the Cisco's, Microsoft, Intel's, which reported earnings last night. Huge earnings. But margins are at their peak, even beyond what the company had expected. And it's a cyclical name. The rally in the semis has been huge. Intel has joined along. And I do believe that we are going to hit the 7,500 level in the Dow Jones Industrial Average. It'll be supported by the banks and by large cap tech. I'm going to try to touch upon this tonight, but let's first get to the stocks that you folks are looking to have reviewed. Let's begin with Joseph's pick, AFOP, daily chart. We have what was a double top. We've now corrected all the way down to support, last seen back in May of this year. If we break down below 1660, Joseph, you have to avoid. If we hold the support level, flash some bottoming tails like you saw here, then you might want to accumulate, build a position, and then add to that position on a breakout above this declining downtrend line. The 3-day rule is in effect. What does that mean for new members? 3-day rule. After a stock breaks out, it has to trade above that breakout point, meaning if it breaks out above this declining downtrend line, it must trade there for 3 consecutive days. We avoid until that point in time. It's right at the 200-day moving average. So as of right now, I would say avoid it until the stock shows us that it can hold the support level and then proceed higher. It's a NASDAQ stock, and the NASDAQ names, the small caps, have been getting hit of late, as you can see by this chart. Facebook, this is for fellow member Kate. Janet Yellen pretty much poo-pooed this entire sector along with the biotechs while she was on Capitol Hill the other day, saying that they were richly priced, and so is Amazon.com and a bunch of other names, which have decided to go after social media and the biotechs. So as you can see, Facebook took it on the chin. Would I be a buyer here? Not ahead of earnings. However, I do believe that Facebook is going to shake off Yellen's testimony and will probably proceed higher. But I wouldn't touch it until we broke out and closed above 68.44. And then I would look to open a position, then add to that position on a close above 71.44, then 72.59. But please remember, earnings are coming out. I would not be overweight. If you're going to buy this ahead of earnings, you may want to think about buying a put option versus your long position just to protect your downside. For all I know, the stock can go to 100 tomorrow, but it's not likely. So just please be forewarned. IGT. This is for fellow member Tom. A huge move up off of this nice consolidation range. I can't attribute it all to a short squeeze due to the fact that the volume bars imply they had some institutional buying in there. So the daily chart looks interesting. It looks like it's a stock that's in recovery. Let's check out a weekly chart. The weekly chart is not looking good. You have a pullback off the 50-week moving average. We're holding support at the 200-period moving average. They tried to rally it back up to the 50-week. It failed. I would avoid this stock right now. Let's revisit it and see where it closes at the end of the week on Friday. This is not one that I would want to touch right now. Weekly chart is looking weak. I don't like topping tails, and the prior week's move was not good. So I would avoid this one right now. Check out the short interest. You have a few days worth of a short squeeze in here, but not all that much. So as of right now, Tom, I would stay on the sidelines. I would see how the stock closes. Can it close above 16? Can it close above 16.26? That's a stock showing that it's got strength. You have the 50-day moving average, which is rapidly approaching the 200-day moving average. It's a bullish sign. So the average is going in the right direction on the daily chart. However, on the weekly chart, they're not. And you can see how the 50-period moving average is acting as resistance. So as of right now, I would avoid this one. I don't see the upside. It looks like a lot of the upside has been enjoyed. So as of right now, if you're looking for a further move higher, I would wait, allow it to consolidate. You have a lot of overhead supply in here, people looking to get made whole, and I would not short this stock. If you're thinking about shorting the stock, I would not short it. LSG, this is for fellow member Kevin. This is on the Toronto Exchange, both of his stocks are, and this is a really nice gold stock. Great double bottom setup here. A breakout, it's breaking out above resistance, now consolidating. What was resistance is now support. I believe that the stock is probably going to move higher. Really good volume. It may consolidate further because gold is getting hit right now. Weekly chart, again, consolidating against this support level. Look at this inverted head and shoulders setup. Left shoulder, head, right shoulder, looking really good. Next stock up for Tom is LUN, another Toronto-based name. Key reversal this week so far. The week is still early. It could change. But as of right now, until we close above this now resistance level, I would avoid the stock. And you could see what's causing this resistance or this topping tail is that you had a lot of buyers back here now looking to get made whole. And you had a head and shoulders setup, and we're right at that neckline. Left shoulder, head, right shoulder. Here's your neckline. So we're struggling to defend it as of right now. We're losing that fight, but that doesn't mean we're going to close here by the end of the week. It may be a buy by the end of the week. So I would want to see whether or not can it recover its lost ground so far this week. As of right now, it doesn't look bullish. So I would avoid this one right now, Kevin. Next stock up is FTEK for Jesus. Jesus, this one is in a pennant formation. It's probably going to come down and retest 496. It's a small cap. You got to be really careful with small cap names. The IWM made a new weekly low, and we need to see whether or not we will hold the support level. So if we hold it, flash a bottoming tail, you may want to open a position. If we break out above this declining downtrend line, add to that position. But as of right now, I would watch and wait. We do have 3 days worth of consolidation. That doesn't mean that it can't come down and retest the support level. I don't see a reason to buy it just yet. Down volume dropped off, which is bullish. This has been a good support level twice before this year and acted as a pivot point in November. So I like the support level. Let it come to us. ACI, another one for Jesus. Another one where it needs to hold support. A bearish day on Tuesday. Great consolidation here, 316. We need to see whether or not it will hold on to this level. Okay, now looking at the coal ETF, symbol KOL, you can see how we broke out of a long-term downtrend line. We're forming an inverted head and shoulders setup. Left shoulder, head, right shoulder. So while I am bullish on coal in the long term, short term for ACI, I am not so bullish. Allow it to consolidate, Jesus. There's no reason to go rushing in on ACI just yet. Allow it to come to us. The natural resource names this week are getting hammered. I don't think that's going to last. I think money will rotate back into them. So remember this weekly chart of KOL. It's consolidating, it's breaking out, and ACI should participate in any rally. However, it needs to hold this support level, 315, 316. And that's it, folks. If you haven't sent in a symbol, you want to send in a symbol, have me review it, send it on in, and I will speak to you throughout the day. Have a profitable trading day.